Hey everyone, this is Daniel Bryant, and welcome to Integrating Financial Wellness into a Broader Benefits Solution. Couldn't be more fired up to talk about this topic. I sort of live it every single day, and hopefully we can make this as interactive and as fun webinar as we can have today. So feel free to ask questions as we go. We'll take the questions primarily at the end of the session, but hopefully you find this interesting, informative, and fun. I just like to start a little bit with the history. So if I think about why am I, a logical person to sort of talk about this topic, you almost have to go back to 2005. So 15 years ago when we started, Jim and I started Sheridan Road Financial, we felt like the retirement plan itself was part of a much broader benefit and human capital narrative. We always sort of felt like it was the chassis around which all of these other conversations were being had, whether it was financial literacy or education or benefits or executive comp or planning. It was all of these different things. And so we embarked on sort of building a new sort of institutional investment consulting firm, as many of you know. And then about 5-6 years ago, we were thinking about, like, where is the future going? Where do we need to position the firm on a go-forward basis to continue to be successful, continue to win new clients, and provide the services that they actually want, right? And so we, in 2014, 2015, 2016, started to really look into the future, into our crystal balls. And, we're wrong often on the crystal balls, but we sort of said, look, it seems to us like, benefits was taking over a greater mind share, wallet share than the retirement, right? Took up more time. It was an annual renewal. And also, companies had limited budgets and opportunity to talk about the retirement situation. So we sort of looked at that. We also looked at the employer as the natural distribution arm for an array of services, not just benefits, but financial literacy and financial wellness. So 2 years ago, we sold our company, as you guys know, to Hub International. 2 years ago, I'm not sure anyone had heard of Hub International, but they're with the Aon Willis merger, we're going to be number 4, number 5 in terms of world's largest insurance brokers in the world, and the largest privately held company, insurance brokerage firm in the world. And it was really because of that convergence between healthcare and financial care that we had been talking about forever. And we just we wanted to see if we really felt like this was the future in our industry. And I think 2 years later, I can tell you my eyes have opened even further in terms of where the industry is going, what you need to sort of compete successfully, and how financial wellness really integrates into a broader benefits narrative. So I'm excited to sort of host this next half hour. So come along, it's going to be fun. And I'm just going to kick things off. I want to talk about 4 things during the next half hour. The first is, what have we learned during this whole COVID pandemic? Right? What have we learned in the last 6 months? I really do think that we've learned 6 years of information over the last 6 months, and has catapulted the industry forward, years. The second thing is, what are the competing priorities that an employer is facing when it comes to human capital and financial wellness solutions? We're just one piece of a broader puzzle when it comes to the employer and all of the different things they're thinking about. So I want to talk about that. We're going to talk about the major trends influencing employers in terms of how they go about making decisions on hiring, attracting, retaining, the best possible workforce, and how they make decisions on where to allocate their money. And lastly, how does financial wellness actually fit into this broader narrative? The good news is today I have no slides. So totally no slides. I'm just going to sort of talk for 25 minutes. I've got some notes. I'll reference them on occasion. So don't worry, I'm not falling over. I'm just sort of leaning forward to look at my notes. So we think about COVID. As I said, I think this is the first time in history where we've got a global pandemic. I don't like to think about historical global pandemics, but if I were to think about that, this is the first time in history it's hit everybody everywhere at the same time. Usually they're like waves, they stay in Europe or whatever, but this is the first time we've seen a global pandemic hit everybody and shut everybody down at the same time, largely at the same time. The other thing is that it's an interesting conundrum in that it's affecting all aspects of a company, right? It's affecting us as individuals, right? With child care, with education, remote learning, stress, emotional stress, loneliness, all of these different things we're contending with, right? But it's also doing the same thing for the folks that are running our companies, right? So they're trying to sort out solutions and opportunities and safety nets for their employees as they're trying to do the same thing for themselves. So it's actually a very interesting sort of dynamic we have going on here. The other thing which we've learned over the last 6 months is that employers, so the CEOs and the boards of these companies, are understanding that their employees are humans, they're human beings, right? And that even though they are working 8 or 10 hours a day at the company, they've got 24-hour problems or issues. Those problems don't just happen at night or during the day or when they're at home or at work. So this commingling of issues and priorities and stresses is a 24/7 sort of issue. And it's really shining a spotlight on that. So that convergence of health, wealth, emotional well-being, all of those sorts of things has really sort of taken hold, and we see it. When I'm in a meeting, they want to talk about what are we doing for the workforce, socially impactful, this, that, and the other. It's actually a complete mind shift when it comes to empathetic leadership. The other thing that I'd like to mention is that, and so when you think about that, you have to sort of have a different perspective when you talk to a company. You have to lead with sort of empathy. You've got to lead with, what are your priorities and how do we help your workforce become more engaged even though they're remote, and how does financial wellness fit into that broader strategy? The second thing I want to talk about is the competing priorities of the employer. So I know when we go in and talk to a client, oftentimes we're talking about their 401k plan. We're talking about financial wellness, and we want to get their mind share, their time. But companies have so many different things on their plate. They're making decisions literally every single day on a myriad of things. The first thing is they're just trying to keep their lights on, like literally and figuratively. They're trying to pay the bills for their facilities, for their employees, their fleet, all of those sorts of things. So they're just trying to keep their lights on. That's the first thing that you got to sort of recognize. The second thing is they're trying to focus on the hand-to-mouth priorities of their employees. And what do I mean by that? Well, employees have to pay their bills, right? Employees have to pay their bills. They have to cover their insurance. If something were to go wrong, they've got to be able to afford to buy the groceries. They've got to pay the rent at the end of the month. So there are needs that need to be met through the employer for all of the employees. And I think when we think about that, I want to talk about sort of healthcare, critical illness, disability, telemedicine, all of those things. Those are sort of away from office or away from work sort of needs. And so companies are sort of thinking through, how do we manage those costs? How do we manage that sort of basket of services? Really important to understand. So they've got huge sort of, insurance needs over here. They've got huge basket of things that they've got to provide to the employees over here. And that's just sort of away from office sort of needs. And then I think, the third thing is really the workplace banking. So if we think about the employees, maybe they've got salary cuts or they've been furloughed. So there's all sorts of ways in which we can provide tools and resources to the employees to get money or get cash when they need it. There are payday loans. There's advances on paychecks. There's all sorts of those sort of workplace banking needs. Prepaid credit cards that people offer. And I think that it's important to know that takes a huge amount of mind share from the employer when they're thinking about how to provide benefits to their employees. And then when you think about all of those sort of hand-to-mouth benefits, the last thing they sort of start to think about is the future, right? And the future is retirement. That's a long way into the future, but we know we need to sort of help the employees think about that today in order to get to that, choose their best version of themselves in the future. So when we think about all the different competing priorities of the employer, it starts with those hand-to-mouth needs, starts with huge insurance needs. So commercial insurance, property and casualty, E&O, D&O, those are huge chunks of the margin when it comes to benefits. And then it comes all the way down, and then we're integrating financial wellness, financial well-being into that future self that we all need to embrace. Does that make sense? Hopefully that makes sense. The next thing that I want to talk about is there are 6 trends that are influencing the decision-making at companies. And you've heard me talk about this before. I talk about this all the time. It's fascinating to see what has transpired over the last couple of decades when it comes to employers and I'm back. That was exciting. Little internet interlude there. I was just talking a little bit about the 6 trends that are influencing how companies are making decisions. And I think it's really important to understand what those 6 trends are. So the first is sort of human behavior, right? How humans make decisions. And when it comes to sort of behavioral economics and this whole philosophy of how we make decisions around our finances or economics, we understand that it's really around how do we run towards or away from risk. That's what we're talking about. And you and me and everybody else, we make terrible decisions all the time, right? We're buying high, we're selling low, we're overpaying for things. We're constantly buying the avocado slicer at checkout that we don't need at Amazon. We're constantly being convinced at the time of purchase to buy things that we don't need. Short-termism instead of looking to the future. So behavioral economics is a critical sort of component in terms of understanding for employers in terms of how to help nudge their employees to make better financial decisions. so that they can have better financial health and life outcomes. So I think the interesting thing here is that I love, Liz Davidson, everything she does at Financial Finesse, and she's been doing it forever. But I think we know, right, that financial education, it doesn't do enough to sort of change behavior. And we can do our lunch and learns. We can bring speakers in to talk about Social Security or Medicare or saving in the 529 plan. But unless you help people change their behavior, we're ultimately not going to change our outcomes, right? So behavioral economics is a critical component that has been embraced, right, by companies to sort of better produce the results they want. It's also interesting to note that legislatively and public policy wise, the government does the same thing, right? Huge investment in the 50s and 60s to make the American dream come true. The American dream was embodied around this image of buying a house, right? After World War II, how do we get the economy going? We are gonna, idealize this American dream, and it starts with buying a house. Well, in order to do that, you make the interest tax deductible, you make the lending practices relatively easy to get a mortgage. So we're helping nudge people in the direction to home ownership. It's the same thing on a 401k plan, right? The rules in terms of making it pre-tax, tax deferred, it's encouraging people, it's nudging people in the direction to save money. We're incentivizing people to do that. If we don't have those incentives, maybe not so much. The second thing that's really important is demographics. Guys, I think you know this. There are 100 million millennials out there that are turning 40 this year. So 22 to 40-year-olds, it's 100 million of them. I'm a Gen Xer, there's only like 60 million of us. So they're almost 2 to 1 us when it comes to size and scale, and they're starting to flex their muscles, right? Meaning, we know 75% of them not only want but expect the employer to provide some sort of financial literacy for them, some sort of financial roadmap, some sort of financial tools, some sort of financial game plan for them. And if they expect it, it's going to come, right? The other thing is around student loan debt. I'll talk about this a little bit later, but we also know that student loan debt is really only a massive burden for the millennial generation, right? So that is, and it's for a whole variety of reasons. There's still student loan debt a little bit older, but that bifurcation between GDP growth and higher ed, tuition payments, that sort of diverged, bifurcated, whatever you want to call it, in 2002, and it's never looked back. So millennials have an overwhelming amount of student loan debt. The average 25-year-old's got like 35,000 of student loan debt and about 5,000 or 6,000 of credit card debt. So the demographics are critically important when it comes to how companies are making decisions as it relates to their benefits. The third thing is consumerism. So I think about consumerism and how we buy things. And I think that, via Amazon or drones or whatever it may be, Netflix, DoorDash, we just buy things differently than we did 10 or 20 years ago. Obviously, this isn't rocket science. But what is interesting is that the millennials now, they're going to be a vast majority of the workforce, right, in 5 years. Or I think the majority of the workforce today, but they're going to be a majority voting bloc, in the next few years. They expect things. They expect benefits to be tailored towards them. It's not one size fits all, right? I want this show, I want that, I want this food, I want this, hold the onion, none of this, blah, 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 right? I do it all the time. I'm a nightmare when you go out to eat. I'm always holding this, extra that, and that's really how they're going to want their benefits. It's important to understand that. The fourth thing is the changing relationship between the employer and employee. I've frozen again. No, I'm back. For a second there, I was like, my hands were like this. I was a little bit frozen. The changing relationship between the employer and employee, it's fascinating to watch over the last 50 years. And there's really, the biggest thing is that the employers today have taken a much more maternal or paternal oversight of the employees. They're more socially aware of them. They want to have a safety net for them, and it is astounding to think that all of these things are being delivered through the employer. They're the natural distribution vehicle for all of these tools, and I'll get to how they're delivered through voluntary benefits, employee assistance programs, and the like. But the relationship's changed. It's not going back. The fifth is the convergence of healthcare and financial care. A friend of mine was the first outside investor in Fitbit. Literally a little plastic piece of thing that costs 3 cents to make. Super simple, and those sorts of things in terms of getting us to better acknowledge that, hey, if we're healthier, our healthcare costs go down. If we have less financial stress, we're healthier, our healthcare costs go down, right? So this thing that we intuitively knew, anecdotally knew, is now in practice. So this convergence of healthcare and financial care is here to stay, and I think we knew it all along. It's like peanut butter and jelly, or whiskey and ice. Maybe it's a terrible example, but they go better together than separate. The last thing is technology and big data. I used to think about, I had a friend who started a big data company like 20 years ago. I had no idea what he was talking about. Big data, whatever, but it is amazing that I can go into a company today, right? I can go into a company today and I can basically tell them who their workforce is and what needs they have. This is how many have pet insurance, this is how many has, renter, this is owner, divorce, single, married. We know all of this information, and it's using that information. Employers are going to be using that information to better target market benefits to individual cohorts. Never done 10 years ago. It's going to be table stakes as we move forward. I'm in the home stretch. So how does financial wellness integrate into the overall benefit strategy? I just like to say, not only have we had this pandemic, but it's a wacky, weird reality we live in, where over 50% of the world's population is under 30. Humans have an average attention span of 7 seconds. U.S. literacy is at an 8th grade level. 53% of millennials would rather lose their sense of smell than their technology. And more people own a toothbrush. Actually, more people own a mobile device than they do a toothbrush. It was a faux pas. We'll cut that out. It'll be totally fine. That's a joke. So if we think about financial wellness, the first thing is, what is financial wellness? And Phil Waldeck and Fred Barstein talk about this all the time. You ask 12 people what financial wellness means, and you'll get 12 different answers. But we all can agree, we all know what financial illness is, right? And we know all the statistics. The statistics are mortifying, right? 80% have insufficient savings in case of emergency. 70% struggle with paying household expenses. 50-some-odd% are using credit cards to pay for those household expenses. And 75% of us are walking around with some sort of financial anxiety every single day. I'm financially stressed right now. I don't even know what I'm stressed about, but I feel a sense of anxiety, and I know you do as well. So financial wellness, what does that mean? It really means, taking yourself from a place of financial stress or anxiety all the way along that continuum to a place of financial fitness or financial freedom, right? It's short-term planning, budgeting, prioritizing. It's executing on a strategy. So it's short-termism, focusing on the here and now, the daily needs you need to do, and then making sure you have these long-term goals that you're trying to hit. The most important thing is you as a company have, or you as an advisor, make sure your clients have what they know to be financial wellness and a plan in place. So how does it fit in? I'm going to go through this quickly because I'm running out of time. Every company needs to have a financial wellness strategy, right? Whatever that may be. It may be focused on a particular retirement income, student loan debt, but I do know that you can break it out into 3 groups: the under 40, 40 to 55, over 55. They have unique needs and they have unique tools with which they need to sort of accomplish these things. Just looking. I was asked on a different panel about 2 or 3 weeks ago. It was a great question. It said, Daniel, who owns financial wellness? The record keeper or the advisor? It's a great question. And I was like, neither owns financial wellness, right? The people who own financial wellness is the employee who it's for. They're the ones dealing with the financial stress. And number two, the employer who's delivering the solution. The record keeper and the advisor, we're facilitators. We're sort of helping, but the owners of financial wellness is the employee and the employer. The second question is, how do people pay for it? That's a big question we get. How do you pay for financial wellness? Is it the company pay for it or the employee pay for it? Well, I think what's really important here is to look at, this is where the convergence of benefits comes into play here. Look at how every other benefit is paid for, right? Healthcare, $18,000 a year we spend on family health and health coverage in this country. It's paid for by the employer and the employee, right? So it's a shared expense. There are other things that we need to think about quickly here, which is voluntary benefits and employee assistance programs. So if you think about how financial wellness tools, software, portals, advice, all those things, how are they going to be distributed within the employee base? My feeling is it's going to be, you're going to have a plan, strategy, you're going to have tools, and you know that not everybody needs the same thing. So voluntary benefits is a logical place to put these tools, right? That's where student loan debt resides. That's where retirement income resides. If you want it, you can pay for it. And as the company, you can convince or help people choose those by just talking about it. Second area is through an employee assistance program, EAP. People don't even know they're paying for this thing. This is an outsourced service that's embedded into your employee benefits. You pay X dollars a month, the employee pays it, and you get all sorts of, counseling, therapy, but it also has all sorts of other services that you could ask them about. So I think that both of those are interesting mechanisms for delivery once the employer says, yes, these are the services we need. Here's our strategy. Now, how do we get them to the employees? I think it's going to be a voluntary benefit. I think it's going to be through the employee assistance program, and I think there's an other channel. But the other channel is, again, that one-to-many. How do you get it to all the employees? So if I think about what the future holds, I've got 2 minutes on the clock. I think that, number one, financial wellness is a must-have. It's table stakes. If you want to attract, hire, retain, reward the best possible employees and be the employer of choice in your industry, you have to have a financial wellness strategy. You have to have these tools. It's totally unacceptable not to have them, right? Number one. Number two, it's going to be prescriptive in the future. We're going to know what our employees want. So it's going to be prescriptive. You're not going to say, here's 1,000 things you can choose from. We in the retirement industry, we know better than anybody. You can't do that. ABC, 1, 2, 3, red, green, yellow, right? We're simple people. So we're going to be prescriptively saying these are the 3 or 4 things that you need. The last thing is, or the last 2 things really quickly, is training. We're going to have to train HR. We're going to train the CEOs. We're going to have everyone get bought in on what are the outcomes that we're trying to achieve and how do we embed this. So they need to be well versed in some of the technology, although most of it's payroll deducted, pretty simple. It's just sort of a connection. So and then it's keeping the C-suite engaged. Once this pandemic subsides, my father would not be proud, subsides, then we've got to figure out what the new normal looks like. I think it's table stakes. I think you're going to be required to have it. And I just appreciate everyone being here. We had a couple outages, I know. I blame it on technology. But this was great, a lot of fun. I apologize I couldn't take any questions. and hopefully I didn't talk too fast. But you guys have a great weekend. Any questions, I'm happy to sort of chat with you guys offline about some of these things. I think about it every day, and I'm living it literally every single day. So thanks again to Excel and Ross and Lisa, and I'm checking out.